Welcome to Macro Hive Conversations with Bilal Hafiz. Macro Hive helps educate investors and provide investment insights for all markets from crypto to equities to bonds. For our latest views, visit macrohive.com. So greetings and welcome, Stefan, to the podcast show. I've been looking forward to having this conversation with you.
My pleasure. Thanks so much for having me do that.
Now, before we go into the heart of our conversation, I do always like to ask my guests something about their origin story. So why don't you tell us something about what you studied at university, how you got into machine learning and quantitative finance, and something about how your career journey until now.
Yeah. So I think coming to machine learning, I have a maybe slightly unusual background. I was sort of an undercover machine learning enthusiast back like over 20 years ago, maybe. I'm an economist by training, and I was always very much attracted to the quantitative and especially data sort of driven side of things, because I always found it very kind of necessary to take all these various models to the data and see what works and what doesn't. So tinkering with, the whole econometric machinery at the time, I found that really interesting, and using computers to do that, very convenient. You can do things at scale and they do the work for you. So I like that a lot. And I did like actually finance from a theoretical perspective back then. But I also always had a very different interest, which was working in international development, because I had traveled early on quite a bit abroad. So I lived in Guatemala for a year after high school, and then I studied in Brazil for a year. So, and I always looked at these countries from a developmental economics development perspective very much, and social development. And so after doing a master's in economics back in Germany, where I'm from, in like early 2000s, I was sitting on the fence between doing a PhD in economics and doing something sort of in the field. And I was very heavily gravitating towards the academic or the PhD side, because I just like the technical work of it, but I'm not an academic at heart at all. So the very specific nature of the work or the topics just seemed so, because the data were small at the time. I did a master thesis on early warning systems for financial crises, which used the IMF as this international financial statistics data set, where you at the time needed still to get the entire CD-ROM. And I used all this data to replicate some IMF system, which used, I don't know, maybe 200,000 observations or so, which in economics was like large at the time, but most of the other things were tiny. Like look at a data set with 2,000 observations to figure out something about industrial organization seemed like, I don't know if that was going to move the world. But on the other side, it was an option to go to Asia. So I worked in Indonesia for 3 years at the central bank as a policy advisor after the financial crisis. And that kind of was more appealing, because you have being, in the thick of it, and you see kind of how policy impacts like things on the ground, and you're also in a very different cultural environment. So all of these things together always fascinated me. So I did that for some time, and then eventually decided that public sector work wasn't that as dynamic as I maybe liked it. I'm a little more entrepreneurial by nature, so I did another master's at Harvard, sort of an international development master's that was also fairly technical, but with the idea to actually get out of this field. So after that, I joined an advanced sort of startup in Austin in fintech, and that got me back into data and machine learning, because we worked in payments technology, and in payments, suddenly you have actual data at scale, and you can actually do things with them. And that was the time when machine learning suddenly became a topic. Andrew Ng launched his courses, and looking at those, I literally in the first lesson saw basically the technique that I had used in my master thesis, which was logistic regression, sort of compared to some non-parametric method, was the first thing they discussed. And I like, what? This is machine learning. And now in an industry setting, suddenly this seems relevant, there was like no holding back, because I realized that a lot of my training and interests suddenly actually had a use. And, this together with the early interest kind of, took me back to this. So that was a little over 10 years ago, and I've been doing it kind of ever since,
And I have to say, you've written this magnus opus of a book, Machine Learning for Algorithmic Trading. It's close to 800 pages, but it's a book that is part of the standard reading for everyone in our team who does machine learning. Like everybody uses it like a Bible. So you've definitely had an impact, certainly on the Macro Hive team, and I am sure a lot of other people as well. And we'll talk more about that later as well. Now, machine learning and artificial intelligence, it's a big buzz term at the moment, AI in general. But I think what's useful is to demystify some of these concepts. So maybe if we start with what you touched on right at the beginning, econometrics. So most people who have done economics courses or finance courses, in their classes, they learn about econometrics, where you have a number of variables, you run your regression, and it estimates the output. So A plus B, A coefficient plus B coefficient equals Y, and you run the regression. You can do in Excel, you can run a package like eViews, or you can see a chart with scatter plots, and you write a nice linear regression, and you have some idea of the relationship between two different variables. And it's a workhorse of lots of people in economics, in finance. People love their charts, two lines moving together. So I guess the first question I have for you is, what does machine learning bring to the table that econometrics can't do?
Well, in a nutshell, like high dimensionality and nonlinearity, it's sort of econometrics on steroids in a way, like one way to look at it. That's at least how I discovered it initially, was that, of course, the things that you look at in econometrics would also generally be considered part of machine learning, but very often the focus of the application shifts from trying to measure, metrics comes from measuring things, right? So econometrics originally with Tinbergen and all the forefathers, it's a little bit about figuring out how you can reliably measure relationships between economic variables, right? And precisely to show, as I said earlier, to figure out whether implications of models actually hold up to the empirical reality, So you have an entire statistical machinery around that and the like. And machine learning comes much more because it's driven by different disciplines, much more with a predictive angle to things, right? So that means they might be using some techniques that you find in econometrics, especially sort of the overlap is more at the baseline, at the foundation, such as linear regression. But as you go into the machine learning literature or the sources there, you suddenly have linear regressions that are designed to use large numbers of variables, and then they add shrinkage to deal with, some of the problems that come when you operating in high dimensions, where you get a lot of variance in your predictions because, parameters can kind of be so influenced by what you see during training. So you usually literally have sort of a variation of linear regression that, gets these ridge or lasso kind of approaches embedded with some penalty term, that aims to deal with the high dimensionality.
And
so
when you say higher dimensionality, what do you mean by that?
Well, I mean, if somebody who's watching has done linear regression in sort of an academic context, you'll typically have, single digit numbers or maybe a few dozen predictors in there, I mean, sure, maybe with some dummy variables, etc., it blows up a little bit, but, you're rarely going to run regressions where you have hundreds of thousands of variables or even a much larger number, right? I mean, something like logistic regression could run at Google in the context of predicting click-through rates, right? And that could be thousands and thousands of predictors, if not more, right? And it could be used because it's fast. You may have low latency in these forecasts. Even though it's linear, you may kind of be gaining from you may be losing a little bit because it's a simple model, but you gain a lot because it's fast. So something like this could run in a production context in a tech company, but with numbers of variables that would be orders of magnitude larger than what you would do in an academic context with a traditional OLS, ordinary least square type of regression. So that's kind of the going from a modest number of dimensions where you really try to zoom in on variables that you care about, right? And then ceteris paribus kind of try to figure out what works there, to something where you say, I'm not going to use everything that is potentially useful to predict my variable of outcome. And then I'm going to try to work around the issues with having so many different variables that might be highly correlated and so forth, to address the variance that comes with the noise that you inevitably have in your training data by adding some additional bells and whistles, which are these shrinkage parameters, which is simply a penalty that means the optimization algorithm is only going to increase or so in absolute terms, the value of parameter, which would make it more responsive to certain data points in your test set when you're actually trying to predict that. If that increase contributes to a significant improvement in your fit in sample, right? So you have to overcome some hurdle. And so there's this bias variance kind of way of looking this, where you say that in order to predict better with lower variance, which means the predictions, they don't swing so much with different test data that you predict on, you may be happy to take in to incorporate or swallow some bias, which means you're slightly off your predictions. So that's one way how the different focus on a different application, which in machine learning tends to be prediction as opposed to explaining why variables A and B and C or variables X, Y, or X1, X2, X3 impact the outcome Y through their various components, coefficients, and then coming up with statistics that measure whether the impact is statistically relevant or not, or just like subject to chance. So this is kind of how you go from explanation and measurement to prediction. And then you have the entire other dimension that machine learning brings to the table, which is nonlinearity, which, in econometrics, you always sidestep by saying, well, we only care about like a tiny little area on the modeling side, on the theoretical side.
Yeah. In econometrics, you're heavily constrained on, it's generally linear. You can have quadratic functions, which kind of introduce some kind of nonlinearity, but it's very constrained. I mean, it's very simplistic in many ways. So, machine learning allows you to work with larger data sets, allows you to uncover nonlinear relationships. It's more explicitly about prediction rather than explanation. So it sounds ideal for finance. And so the question I have to you then, why doesn't everyone use it in finance today?
Well, my book has 800 pages, so it takes a little bit to get through it.
Yeah.
I'm just kidding. So, well, obviously, finance has its own constraints. Machine learning has taken off. So I work a lot in different industries as well, where the applications are sort of more resembling low-hanging fruits. In finance, you have the special nature. First of all, many people are trying to predict the same thing. So to have an edge generally is harder. Prices may incorporate a lot of the information that's out there because so many people are at work trying to interpret that information, both on the longer term as well as on very short horizons. So you're simply already picking a much harder game in terms of predicting things, right? And that also implies that the signal, a signal meaning any type of information in any of the data that you have at this point in time that may speak towards the future, any of that signal may already have been exploited by someone in some way. So what the data represents is largely non-signal, which we also like to call noise. So that is hard, and there, of course, you have this challenge that these potentially complex models in machine learning, they can pick up a lot of the noise just as well as the signal. So there's a huge risk that the models, instead of extracting the signal, they also extract the noise, if not only the noise, which means they become useless for prediction or very faulty, So that clearly is a big challenge. Then you also have the problem of machine learning, which on the one hand likes high dimensions, which in finance you have at least a resemblance of a lot of potential inputs, lots of securities are trading, lots of variables you can compute from the price history, so many other data you could bring to the table. But one thing that you don't necessarily have is a very long history of this data. So YouTube may also not have such a long history, but they do have a lot of data for the short amount of history that they have, right? So if you want to build machine learning models that are able to recognize cats and dogs, they stand on a different foundation in data terms than than somebody doing the same thing in finance, where you have maybe 10, 20, 30 years of stock data, where it's not where it's not entirely clear that going from daily data to tick data really enlarges the information that you get in the data, whereas additional videos clearly tend to show you different cats potentially different cats or the same cat
Yeah,
from a
so I
different
guess
angle, you know?
yeah, no, I see what you mean. So finance, you can get lots of the variables on one side of the equation. You get millions and millions of potential predictive variables, but on the other side, the dependent variable, i.e. the stock market, there's only one US stock market that goes back 20, 30 years. And so you don't get the big data on that side. Whereas with YouTube videos, you get both sides. You get billions of cat videos, as well as billions of potential features, within that. Or so in finance, I mean, where do you think machine learning is used most commonly? I mean, which areas, do you find it most heavily used?
I mean, I think there are applications sort of across the board, people use it for higher frequency trade because it is useful to extract information. What is generally the precondition is that also the clients I work with, where I find the application of machine learning productive, is when you operate in an environment where there are already quantitative investment strategies that may be run by humans, at relatively high frequency. So we're talking a few seconds, minutes, or longer term, where you can then use machines to exploit similar quantitative information in a more efficient way, right? So if you have signals as opposed to human interpretation of news, right? So you don't have that much people that read newspapers and listen to look at Bloomberg news tickers or read in-depth research reports or visit company executives and grill them on certain items, but you have people that look at some type of quantitative source of data signals and the like. If you have something like this, you can very often, especially if that has already been demonstrated to be useful and profitable, you can very often translate that to a machine learning setting in a quite straightforward way. So there's always this trend towards, so this is sort of on the quantitative side, right? So if you ask where is it used, it's obviously.
So an example there would be if somebody has a momentum model or carry model or something like that. So it demonstrates it does make money over time. You can then have a machine learning overlay, which will enhance the returns because it will kind of use data more efficiently to predict the next day returns of that strategy. So you can basically risk manage it using the ML signal.
Yeah, you can sometimes, very often these strategies, they use some signals and they use some rules to translate signals into entry or exit orders. So the entire thresholding that happens there can often be done more effectively or more efficiently by a machine learning model, because it's a little more sensitive. It just can process these things a little better, So that's a useful application. I think this is kind of what's closest to kind of home, because the people that operate in this space also tend to be closest to this kind of methodology, as opposed to sort of the purely fundamental investors, that build kind of on their deep insights in industry. And naturally they ask, how can a model sort of capture my judgment, and for good reasons, especially those that do well, they certainly have good reasons to ask these. It's not as straightforward, but then you hear somebody like Sam Altman, who runs OpenAI, say that, when they ask him, what do you think is the real killer or the big application that is going to come out of things like ChatGPT, he does say that he is looking forward to the person that builds the killer investment machine, a la Rentec, using large language models, So moving from the sort of purely quantitatively driven to something that actually starts processing much more diverse information that's out there in the world.
You mentioned Rentec. You mean Renaissance Technologies, which is perhaps the most successful fund in the world.
Exactly.
It's highly quantitative, works at the high frequency level. But I guess Sam Altman's arguing that if you incorporate what we call unstructured data, text, audio, video on top of structured data, then you'll have this amazing investment tool potentially in the future.
You could.
Who knows? Yeah.
Potentially. The capabilities are sort of emerging, the thing with these large distances, like the ones that we have to travel to get from the current state to something like general artificial intelligence, you have to live with the paradox that we are not closer to the target, but we're still very far away, so there is a bit of a tension there. I'm personally working with these models. I think it's fantastic what they can do. The performance is amazing, and you see glimpses of something that goes beyond sort of text summarization towards reasoning and these things, but there are also the cases where they failed. So you always still wondering, to which extent are we observing with these impressive, like Geoffrey Hinton, runs around and tells kind of a case where he got struck by the common sense knowledge of a large language model that was able to solve certain simple tasks, but that previous AI models were unable to understand. I can tell it in a minute what it was about. But the idea was that there are also many other cases where it doesn't work quite yet. So the question is this a statistical fluke? Are we seeing random cases of things working, and they, with like all the biases that we have in perceiving news, they stand out and people don't report the other 80% where it doesn't quite work. I personally find in my own usage sometimes ChatGPT a little less useful than I'd like it to be. I think it's, of course, fantastic for many common tasks where the quality standards maybe not that high, like writing in a random email and the like. We really want to formulate a text according to something you really have in mind, some concept. Sometimes it does take quite a bit of work to get it there,
I'd agree as well. I mean, we're using a lot in our company, so I'm getting different people with different approaches to use it, and we haven't quite found the killer, approach for everyone to use it. And so I think the way you write the question or the prompt, and hence the whole industry of prompt engineering is very important. So, it's not as straightforward as it seems. There's a lot of add-ons you have to do to kind of make it really really understand the nuances of prompting and things like that.
Yeah.
So, yeah.
We're at a tricky point here, it's I tend to be a skeptic by nature. Maybe it's my German roots. I don't know. But I'm curious to see what we will say about this in 3 years. Some people think the technology will plateau unless we find a different kind of paradigm, beyond the transformer-led kind of interpretation of text. Others are very bullish about it. I have an open mind. I think anything is possible here. But right now, we need a little more to get to these new Renaissance technologies based on LLMs in the near future.
Maybe we can talk a bit more about LLMs, but perhaps shall we start with neural networks?
Sure.
So maybe you could, so this is one version of machine learning algorithms on neural networks, and that's the basis upon which LLMs, large language models like ChatGPT, are based. So can you kind of describe, explain neural networks like a 5-year-old, as people would write in ChatGPT?
Yeah, I mean, it really helps if you're familiar with the concept of a linear and especially a logistic regression, because in a way, a neural networks, it's a vanilla baseline sort of densely connected neural network is literally multiple or many logistic regressions connected to each other, where the output of one linear logistic regression flows into the follow-up, the next logistic regression. So it's like chained functions, right? So the important thing about neural networks is that you have sort of neurons or nodes in there that receive inputs at the base layer, they literally just receive the input data. This can be pixel values from images, or it can be any numbers from financial data or so. And they, these neurons where these data or these input values arrive, they pass these values on along some sort of, you can draw them like a graph, right? Where you have these nodes and these edges that are connected. So the data flows from one node or a neuron over this edge to a new node. And as it flows over this edge, it gets typically multiplied by some weight, which is simply a coefficient. Hence the similarity to a linear regression, where you have your input data point X, and you have some beta coefficient that multiplies it by 3 or by 0.3 or by -10, right? And then you have a new value. And then at these various inputs, these neurons at the second layer, right? So neural networks tend to have multiple layers. You have this input layer where data comes in, and then these input nodes or neurons, they are connected to multiple neurons above. which also means that each neuron on the level above is connected to multiple input neurons. So what they essentially do is they receive these various input signals, so data points that have been multiplied by some coefficients. They just sum those up, again, very much like a linear regression, and then have some sort of intermediate value there. And then comes the important point: this intermediate value passes through an activation function. And the activation function can take many different forms. It can literally look like the one that you may be familiar with from a logistic regression, which is sigmoid kind of form, right? So whatever the value is originally, it gets squished to a value between between 0 and 1, or if it's like a 10H function, then it's like -1 and 1. So there are many different variations of these activation functions. The important part is that they transform whatever they get as input in a nonlinear fashion into some output value. You also have these functions that look like, they're called rectified linear units. They look like a call option, so they're sort of linear, but they actually are cut off. So they're like flat at some point. So whatever the input value is up to a certain point gets kind of a 0 output. And then after that, it goes up linearly. And now you have to imagine that this is kind of what happens in one of these neurons. That happens in all of the parallel neurons in a given layer. And all these output values, right? These activation values, which may be between 0 and 1, or, however the activation function operates, then continue to flow to the subsequent layers. So you suddenly get a lot of complexity here because, you have all these various neurons that operate in parallel, that do similar operations. And this can happen throughout quite a few different layers until eventually they arrive at some output layer, which typically is designed to fit some task, right? So you may have a regression neural network that simply outputs one value, right? Which can maybe range from -infinity to +infinity, or you can have a classification neural network that maybe outputs 10 different values, where each value resembles the probability that, the object that you're trying to classify is in one of 10 classes, right? And then you would say, oh, where the probability is highest, that's the prediction for class, maybe number 3, right? So maybe it's a cat and not a dog instead of a dolphin or so. So that's essentially at a very high level how this works. Conceptually, the idea is that these are all nested functions, right? So you can write this out as how kind of the output value ultimately depends on all these different inputs, because it flows through the graph, this computational graph, from the input through layer 1, 2, 3, however many you have, until the output. And that is kind of the forward path, right? So this is the forward flow of the data from the input layer to the output. And then, so that's kind of how the vanilla networks work. And maybe you get a glimpse already. If it's so complex, there are many, many, many different ways to design those networks. And that's where it gets really interesting.
Yeah. And I guess originally when neural networks were first developed, I know, was it in the 50s or the 60s, the idea was to kind of mimic the human brain in some ways, and hence the terms, I suppose, neurons and such. But the idea in essence is to have these chained regressions.
Exactly.
Yeah.
Exactly. So there were even earlier models, goes back to like the 20s or so. Okay. But what they didn't have at the time were learning algorithms. So people have always tried to figure out, oh, what do we have between our ears and how does it work? And so there were these mathematical models, but they only had like in the 50s for the first time this kind of learning algorithm. Because one thing is that you can draw this kind of thing, right? And you can write all these equations. But the interesting piece as well, initially, these weights, these coefficients, they don't have a value, right? We can maybe randomly initialize those, but how do these weights actually arrive at some useful value? And in linear regression, you have some algorithm to do kind of the matrix algebra, because you can solve your equation there. That doesn't quite work with neural networks because they're a little too complex and they're non-linear. So you have to have a learning algorithm that actually, as you have some training data where you have all these features, all these variables that provide the values for these input neurons. And then you also have an output value that tells the model, well, given these 10 or 100 or 1,000 input values, that is the value that you ideally predict. And then you don't have just one sample of those, but a lot of those, and the model should get all of those right, or as right as possible, right? So, and for that, the weights need some actual values. So how do you get those? Right? That was something that literally took decades and decades to solve, Well, so they had an issue, a simple one at the time, but to arrive at this actual back propagation algorithm that could do this not just for a single layer, but for multiple layers, and do so actually in practice, took quite a bit of work. And of course, Geoffrey Hinton is the one man that's most closely associated with that sort of innovation,
Yeah. So we have these neural networks which have all these layers and these neurons, some ability to learn, and hence neural networks are part of deep learning. I suppose that's part of the sort of deep learning family, I suppose you could say. And I suppose one challenge always with these with neural network models was the idea of dealing with sequences of information. So when you have one event followed by another event followed by another event, it would always struggle a bit with sequences. Whereas something like images, which is not really an image, is just an image, is one thing. But when you have a sequence like a series of words in a sentence, that would always be a challenge. And so there was a development in neural networks where you had what's called transformers were developed, I think by Google in 2017, which was the big breakthrough, I suppose, for large language models. So can you talk a bit more about what that innovation was?
Yeah, so I mean, the interesting thing about neural networks, and we'll see this in a minute when we talk about applications in finance, is that in various areas, domain-specific architectures tend to emerge, right? You mentioned images, so there are these convolutional networks, that take into account that in an image it does matter, what the neighboring pixel, what's the value of a neighboring pixel, right? It doesn't matter as much what the value is of a pixel that's like 50 centimeters away in a picture, right? Like the one behind me. So, and then you have sequences, the vanilla network treats each data point as, drawn from an independent, from a distribution that's independent and identically distributed. So in sequence, you don't have that. So there were these recurrent neural networks that came up that were specifically designed to keep a memory of what happened before, which is already progress. And this was kind of the workhorse model for also language, which language, of course, is a sequence. Now, in time series, you may be very concerned with the previous value. In language, you may or may not be concerned with the previous word, depending on the sentence. You may also care about words that are actually 5 words away or that follow later, that together form a unit and help you interpret or make sense, like sort of recover the semantics of what's being spoken. So the transformer was kind of a sequence model where it suddenly, the original paper was called Attention is All You Need. So they come up with this attention mechanism where the model learned from numerical representations of the words. So an intermediate step was to discover that you could represent words as vectors, right? So it was a long-standing problem in language. How can you take language words and convert them into something that a computer can understand that still retains some of the meaning, right? So there was this string of research that came up with this idea of embeddings, where individual words or, parts of words are represented by a vector that maybe has 100 real numbers in them, That turned out to be very useful because the way these numbers behave, especially relative to each other, actually retains some information about what that word actually means. So these transformer models, they operate on these vectors and they learn, given a lot of input data, very large amounts of input data, so the entire internet essentially, which words, which other vectors to pay attention to when interpreting text. And they learn to interpret text by filling in or predicting missing words. So one way the technique or one way training at this scale was possible without having humans label data and say, oh, we do machine translation. So let's take a large body of English text and then let somebody translate this into French, That, of course, you can't do with the entire internet. But if you learn kind of they call this semi-supervised learning, self-supervised learning, where you have the entire input data and you just randomly remove words, and then you train the model to figure out what the missing words is. So in order to do that well, to sort of predict the missing tokens, the model learns which other tokens in the surrounding context, and the context can be fairly large, should the model actually pay attention to, and that's why it's called attention mechanism, to predict the missing word. And that was a major breakthrough because suddenly you could build on the inherent structure of language, which is as I described earlier. It may be the next word or the previous word, but it may also be something that was said in the previous sentence or a little earlier or a little later, that if all this is taken together, it suddenly becomes very clear what the missing word is. Whereas if you only look at the earlier models, looked at like the previous and the next, say, 3 words, you might be missing a lot of that, So that was really kind of a quantum leap in capabilities of language models. And then a lot followed from this,
Yeah. And so you've mentioned a few sort of terms there, vectors, which are very important. So the innovation there was to find a way of translating words or parts of words into something that is more understandable by computers. And vector embeddings is a big term people use now to understand, to kind of translate, sentences and language into something that computers can understand, or these languages can understand. And you also mentioned tokens as well. So people use ChatGPT now. Depending which version you use or use the APIs, you'll realize you get charged for the number of tokens that are used. So tokens are kind of parts of words, I suppose, are parts of words. And the more tokens you have, or when you have an input, the more compute powers needed, and so you'll be charged more. And so it kind of works as you'd expect. The more compute power is needed, the more you'll get charged, and it's done at the sort of unit of tokens. And so ChatGPT very cleverly uses all of this technology. Now, in terms of applications, so you've said you have looked at ChatGPT and LLM. I mean, what's your gut say about how we can use this in finance today? I mean, is it summarization, which of course is useful, that's helpful? Is it building new time series based on sentiment analysis, more effectively? So using these LLM models to interpret the sort of the sentiment of corporate earnings transcripts going back historically. I mean, what do you think is the best way to use this now?
Well, I mean, so there are some applications that are very obvious. You mentioned them already. I mean, if you ask again, like Sam Altman himself says, he doesn't really use a lot of tools, and ChatGPT, the one thing he uses it for daily is summarization, right? Be that entire set of incoming emails, Slack channels, what have you, or other knowledge bases, documents, etc. I mean, that's very obvious. And personally, I think that in the area of finance, language models the biggest use case immediately is, going to be support. And that has been used already, of course, for all these people that ingest a lot of information. I mean, they exist. There's so many analysts, researchers, et cetera, et cetera. So it's pretty clear that, this is going to condense some of the information. And the other thing, but that's more like a generic use case, of course, is just generating text, I mean, from investor relations to research reports, some of these things have already been automated. All of this is going to get better and faster, but that's not really exciting in the sense that it opens new investment possibilities. It just makes people more productive at what they're doing already, right? So all these new kind of applications, I think we're like in an experimentation phase. One thing that comes up a lot with these large language models is when it comes to how can we take this to the next level now that we already exhausted the internet to train them, how useful are synthetic data? How useful is synthetic data going to be, right? Because of course, these generative models, they can generate a lot of new data. So what's kind of the current frontier of research is let us now produce more output produced by these models to then train better models, That is really interesting. Is that going to work? This is unproven. So OpenAI is very hopeful on that front. But I mean, it's a reasonable thing to assume that might work, but it might also fail because, the philosophers, how can you create new information from things that aren't there? So I think you can debate this endlessly, whether it might or might not work. And synthetic data, of course, is something that's also interesting for finance, There's a chapter in the book that deals with this a little bit, that talks about the possibilities. That was kind of based on a paper that came out 2018-19. I think the capabilities at that point were very limited. There is hope that you may be able to produce better synthetic data also in finance, right? To train model. It's already happening certainly in other domains like risk management or consumer finance, etc. Right? So to generate synthetic data, which could, of course, and that harks back to one of the earlier things we discussed, to maybe deal with the limited data histories, that we have to apply machine learning to finance, right? So there is an opportunity there, which is certainly actively explored, but I think far from solved, whether that's viable. That's something I think I personally find, would be a major game changer if that were possible. But again, it's somewhat early days.
Yeah.
The general idea, so if you think about how ChatGPT and models of this nature are trained, right? They use one of these large language models as main input, which uses the transformer / attention kind of technology and other features. And then you have the second layer that uses this reinforcement learning that builds on human feedback, The models that we're seeing right now, they are using somewhat generic templates, They may be sophisticated, so it becomes more and more an issue to train these models using smart experts that produce smart templates that are good sort of examples for the model to guide their output, because the goal of these templates is to make the model more usable, right? Because the original large language model produces all sorts of stuff, right? It may or may not be useful. So you have to canalize that and align this with the user's goals. Now, these are generic templates. So you could start thinking about what kind of outputs of such a model could actually be interesting specifically for my finance use case, right? If I'm a larger, and it becomes easier to sort of add this reinforcement learning layer, right? So there are already software tools being open source that permit this, like Microsoft open sourced something not too long ago that allow firms, companies to start building their own ChatGPT version tailored to their use case, right? Which may be closer to, make suggestions, pick out of the 100 stocks in our universe, the 20 that we should invest in based on the following, right? And then you have in the context window relevant inputs, So there's scope, but there's work to do as well to get there.
No, that's great. Now I want to sort of pivot towards some of the topics as well. I mean, we talked about neural networks. We didn't talk about decision trees, which is, again, one of the workhorses of machine learning, and the spin-offs from that, random forest gradient boost models. So, can you talk a bit about decision trees within machine learning, because that's really one of the foundational algorithms that allows you to think about machine learning in a kind of in a good way.
Yeah, I mean, so a decision tree, sort of as an algorithm, works a little bit like this kind of game of 20 questions, right? Like you try to figure out from knowing not very much, try to isolate some solution, by always dividing or isolating, a subset of your samples or your potential solutions. Like yeah, whatever. That's kind of how we in a class try introduce decision trees, but then we have slides to actually show it. So I realized I don't have a slide, so it's to walk me through this. So as an algorithm, it's like you want to figure out how to. So say you have a data set that has 10 features, and you have positive and negative outcomes. So you try to figure out which feature, right, should I take next to split my observations by whether that feature is above or below a certain level. And then now I have my first split in the tree, and now I have some data points on the right, some data points on the left, depending on the criteria that I chose. And then I simply continue sort of recursively again and again, operating on the remaining data until ideally I only have nodes at the bottom where I only have cases where I have a positive outcome or a negative outcome, right? Or data points, if it's a regression, that are as close as possible by each other, where you may realize you could, of course, build this decision tree ad infinitum so that you only have a single case in each node at the end, at which point you will always have a perfect outcome. And that may be great for the data set you just worked with, but may actually not work as well for another 1,000 data points that are randomly collected because you sort of overfit on a data point. So decision trees are prone to do that, which is why we have these ensemble algorithms you might want to mention next, right?
Yeah, sure. Yeah, and I guess it kind of within statistics, it kind of looks like a binomial sort of distribution when you kind of draw the trees when you're doing kind of the maths of this all. So, and the reason I say that is a lot of people get scared by machine learning, but in many ways the principles are from if you're familiar with statistics and econometrics, it's actually not that hard to switch from one to the other.
Yeah, exactly.
And people shouldn't be afraid to make that leap.
Yeah, it's a lot of like this jargon, to put it negatively, or just once you realize that people have tried to solve somewhat similar problems coming from a different angle, the solutions will somewhat overlap, right? They may be called differently, but as you get a little closer to the methodologies, you re-encounter a lot of the patterns, like I tried to explain earlier with the neural networks, where you sort of have logistic regressions as building blocks, And once you realize that, oh, it's actually my training from econometrics might actually take me quite some, it might be a very good foundation, and it might cover a little more of machining than I think it does,
Yeah. And so you said with decision trees, the basic version, the risk is you overfit. You become so precise, on the training set that it just doesn't work on a different sort of data set. So what are some of the common ways you can overcome that?
Well, I mean, clearly you don't want to build a decision tree as deep and fine-grained as possible. So you want to restrict yourself at some point, and all these, which is a little bit like these penalized or these shrinkage version of linear regression. In that case, you want to limit the parameters from becoming too extreme and to react too proactively to the data that comes in. Decision tree is a little bit similar in the sense that in order to create a new node, you want to overcome some hurdle. It really has to reduce your loss function, the one that you're trying to optimize, by sufficient to really make it worthwhile. Because if you don't impose any constraint, you just keep adding nodes to the tree, and you're back in the situation where you classify each data point separately, and that doesn't work. So you have to kind of find some middle ground, right, between zero nodes in your tree and like as many as you have data points. And then, of course, you have the ability to do that because maybe a decision tree that is much smaller is actually not such a perfect predictor, because it's very simple, right? And the reality of what happens between the input data and the output is a little more complex than that. Then you have the ability to actually combine a bunch of different trees, and there are different algorithms that allow you to do that. And these type of algorithms are sort of, for your standard tabular data set, tend to be the workhorses and the best go-to solutions to get decent predictions relatively quickly.
An example would be, say, random forest, where you basically have a whole series of these decision trees, and it's like what's called an ensemble model. So you're kind of, I guess, averaging all of them together to get the sort of results. So it's less overfitting.
Yeah, exactly.
And it tends to work really quite well. Like random forest, I find at least, that's almost like the benchmark to some extent that you need to beat.
Yeah, random forests are great. They operate on randomly sampled versions of your data set. It's called bootstrapping. So you kind of recreate your data set by sampling with replacement, which you may remember from statistics. And so you have basically, so if you have 10,000 observations, each tree is built on a different version of these 10,000 observations, which may have some original data points repeated and others missing. And then you just build a tree. You may have other constraints in there, but it's also fast because you can, if you want to combine 100 trees, you can just build all of those in parallel, right? In the background, you just do your sampling, and then you just build your 100 trees, and voila, you have your ensemble model, and then each tree predicts something. And then, as you say, you average those, with regression, you average those. So you have the vote for, should it be class 0 or class 1, etc., right? And there's gradient boosting, which also has become extremely popular. That I find myself using a ton because, so this is sort of sequentially, it builds new trees against the results of the previous tree. It tries to sort of minimize errors that the previous trees produce, so that you can't run in parallel. So there's a bit of a cost sort of computationally, how fast this all works, but it often tends to produce a little better results than gradient boosting, but they really tend to be very close. It really depends a little on the data, what works better, But if you look at Kaggle, the platform that produces all these data science competitions, gradient boosting is certainly very popular. And it has been in finance as well. But I just one thing I just wanted to mention, since we talked about neural networks, if you look at finance, I think you realize that now finance is at a point where finance research is producing much more domain-specific neural networks, that take into account that you have very much noise in the data, but you often only have a limited number of underlying factors that drive investment returns, the entire idea of factor investment. So you have more neural networks that are designed from an architectural point of view to sort of extract these factors in sort of implicitly and use those to make predictions. You really see how the field is advancing from these initial sort of kitchen sink approaches, where you try to, no, we have these high dimensional models, let's just throw everything else, throw everything at them because they can shrink it and deal with kind of the noise but let's actually try to incorporate what we know about the domain into the model, so that the model then becomes more efficient because maybe it needs fewer parameters, right? Sometimes you can substitute knowledge for parameter complexity, and they tend to perform a lot better, right? So and this is fairly recent. Progress has been slower in finance for sure than in other areas, at least the published research, because in finance, publications of really interesting things tend to be a little less forthcoming than, say in computer vision, So that's an important thing to keep in mind. But you clearly see a similar trend to, like I mentioned earlier, in image recognition. You have domain-specific convolutional networks, and language, you have the transformers. In finance now, you also have neural networks that clearly aim to, and do so successfully, incorporate what we have learned about the domain of, stock prices and how different elements or different pieces of information may drive those returns.
Yeah. And right at the beginning, we talked about, who in the financial sector is most amenable to using machine learning. And obviously the quants are, people who do kind of sort of systematic, like factor type investing. They might be open to it, but we talk about fundamental type people who are more kind of qualitative or discretionary. I mean, what would you say to them about machine learning and this whole field? I mean, how would you tell them, should they use machine learning in some way? I mean, what would you say to them?
I think what's really, and you learn this more as you work sort of in different industries or different contexts. Machine learning is just a tool that you can use to support certain elements of a process, right? Like when you in the investment context, it's very often, should I use it to run my entire hedge fund or my entire investment decision process, right, end to end, or not at all? Whereas kind of, even if you're a fundamental investor, you may very well be predicting certain inputs into your decision process, be that corporate earnings or what have you, right? I mean, you work on the macro front, right? So people are predicting things on the macro front, and maybe machine learning can help with certain pieces of that process, right? So to better understand that, machine learning gives you a pretty colorful toolbox, to do things, mostly on the predictive form, on the predictive front in the form of supervised learning, but there's unsupervised learning on various other things that you could potentially leverage to automate certain things, process information more efficiently. Then you can start screening. And so when I work with a company that has nothing to do with investment, then we literally start screening their processes and see where could machine learning actually be utilized. And that doesn't mean we're going to close the company down and have one machine learning run the company instead, right? But here's somebody who might just run some model once a day or once a month to get some forecasts for something, or, we automate some process entirely. So there's a whole spectrum of applications. So it really depends on the context. And this is kind of what people, I think, are learning now, that it's a much more nuanced approach is required, much more context specific to kind of learn how to use it. And then you don't have any more these, we have these 100 use cases, then it's, it's a tool that, everybody uses to their specific liking, and some more, some less. But most people will use it to some extent at some point. I'm pretty sure. There's this, overestimated in the short run, underestimated in the long run kind of tendency with these new technologies. And I think this is a prime example. You see this in some industries where the kind of effect has already taken hold very much. Others are lagging a little bit, but eventually, and I'm talking 10 years, you will see this much more common. People will be familiar with this, right? You come out of university, you better have a good idea conceptually what all of that means, There will be less need to code because we have ChatGPTs and the like. So not everybody has to sit there and do Python and so, but conceptually, this is something that will be part of our day-to-day, like many other technologies that we have absorbed,
Yeah. Now, I did want to round off with a couple of personal questions. You did mention university students. So one question I have for you is, if you're a young person who's about to leave university to enter the job market, start their career, what advice would you give them?
I mean, so for starters, digitization is not going back. So data will be part of all job processes everywhere. So just learn about how data is useful in your environment. These predictive data science type of techniques, understand them conceptually. Not everybody is, has sort of the interest and the passion to spend a lot of time coding and the like. And you don't have to, absolutely not. There are many other ways. What's really important is to know when to use which tool, where it can create value. That is something that you should really understand. It's also not that hard. It's more something that's really useful, whereby sort of missing out on that opportunity, you put yourself at a disadvantage. There was a time when there was this, everybody should learn how to program and the like. And I'm a little skeptical about this. I think it also has waned a little bit, but understanding conceptually what's happening and what exists and what they do is definitely important. I think it's happening naturally much more today already than just 10 years ago.
Yeah. And another question, what's the best investment advice you've ever received from anyone?
If it sounds too good to be true, then it probably is. Just the last few years, once again, testament to that. So
yeah. No, that's a good one. And then on books, we had a conversation earlier about this, but it'd be good to hear your thoughts. I mean, I always ask this to guests, what's the best book you read recently or books that influenced you? But you have a particular take on this question.
Yeah, books are, so we were discussing earlier that my reaction was a little bit, books maybe a little overrated. I was a big reader. I loved reading when I was young. I did a lot of it. I realized at some point I don't get the same joy out of it, which naturally is because you just don't have this immersive experience on the novel side, like reading novels, like, you used to devour them in one sitting. These things are somehow not as easily compatible with the day-to-day anymore. But so I switched to audiobooks, getting a little bit of fun there. But also on the nonfiction side, it seems that there is so much shorter form content that is there's a very solid competition for these 200, 300, 400 page books that try to, sell some idea or some piece of information. It's often just too much of a good thing, like it's, and, so you said there's an 800 page book I wrote. So who am I to, like sit in the glass house and like throw the stones. But generally, and I can, so that book, of course, is totally exempt here from my.
I would say I'd make a distinction with your book. It's more, as we were saying earlier. I mean, it's like a cookbook almost, like a reference book, a manual. I think there is a value in that, where you basically need this kind of reference to give you structure so that you can, deploy something. I think, these nonfiction books, which have one big idea about the world, like deglobalization or geopolitics or AI is going to kill everybody. Those sorts of things, I often feel like you could just write like a 1,000-word essay, probably that will cover it.
Yeah, very often. Exactly. That's why I just find myself, like, even if I try to read some, I just put them away after some time because the interest just, you have to force yourself to say, I read this book to the very end, but clearly the joy, the information, the sort of the marginal gain kind of goes down quite a bit very often. But there's so many other, like, just like look at Twitter, right? We said earlier, like, how much more valuable is a 300-page book compared to a Twitter thread, that has, I don't know, 1,500 characters. So, juries. I mean, I think it's somewhat obvious, but demonstrated by what we do most of the time, because the books are still there, but readership is dwindling.
And let's not talk about TikTok. That's what probably most people spend their time, on these days. One final question is: if people wanted to follow your work, reach out to you, work with you in some capacity, what's the best way for them to do that?
I mean, it's obviously LinkedIn generally for professional context. It's easy to get in touch. Specifically on the book, there's a GitHub repository that has all of the code. So if you just like look up my name and look on GitHub, should be easy to find. It's like almost 8,000 stars, so it's become fairly popular. There is a third edition in the works that I hope to make some progress on. That hopefully will kind of rekindle interest in this more. There's also a community. There's a website I have around the book that has a community on it where people can exchange ideas around the subject. So if you just Google my name and the book, that comes up pretty quickly.
I'll add links to all of those things, by the way, in the show notes. So it'll be easy for people to access. So
awesome.
So great. So excellent. So thanks a lot. I learned a lot as usual whenever I speak to you. So it's great speaking to you, and good luck with everything, including the third edition.
Yeah, thank you. I hope the audience found it useful and is still around at this point. Either way, thank you very much for having me on, and I look forward to talking to you again soon.
Great, thanks. Thanks for listening to the episode. Please subscribe to the podcast show on Apple, Spotify, or wherever you listen to podcasts. Leave a 5-star rating, a nice comment, and let other people know about the show. We'd be super grateful. Finally, sign up for our free newsletter at macrohive.com/free. That's macrohive.com/free. We'll be back soon, so tune in then.